Hello and welcome to Pricing College with your hosts Aidan Campbell
And Joanna Wells.
In today's episode, we want to discuss the movement to a cashless society and what that will mean for business, for consumers, for value, and all things pricing related.
Well, there's definitely a trend for using less cash nowadays. People seem to prefer just paying, tapping and going, using their cards much more than cash. Before, people would carry much more cash in their wallets. And I suppose businesses, small businesses, in particular, I'm thinking like cafes, would be much more set up for that sort of cash-based sort of society. But things are definitely changing.
Yeah, I think obviously using cash, it was something we were just used to. Workers would get their payment, often on a Friday evening. They'd get their money in cash. They'd go to the office and pick up their cash. Anybody working in the hospitality trade obviously received their money in a small envelope. Whether tax was paid always on that was a different question. But I think certainly over recent years, and probably accelerated to some extent by the whole COVID restrictions and fear of touching things, that has increased. What I sometimes think about when I'm using the tap and go. What are the benefits? What are the negatives? What is the value? Clearly, there's a value in not having to go to the bank, to the ATM to pick up cash. So it saves you that time, it saves you that effort, and so probably that's why people like it.
Yeah, I think the cashless society is really tapping in on that value driver of convenience. People really nowadays love convenience. Everything has to be simple, easy, and people assume that paying with the card is easy. It's easy for them, but there's a whole range of financial structures underpinning that transaction, which are rather complex and actually are very difficult to develop, to be able to build that sort of cashless society and also monitor.
One thing I think, certainly from the customer perspective, do people stop seeing it as money? When you go in, we've covered this in some of the previous podcasts, I think, and we covered it on the menu, in menu pricing, whereas if the menu doesn't have a dollar sign, people don't really see it as money. I notice clearly we always used to talk about people paying for stuff with credit cards, they pay on the never. It's almost seen as not real money. When you have real tangible cash in your pocket, and we touched on this in a previous episode about the music industry, when you have a tangible thing in your pocket, maybe you see it as more, maybe you spend a bit less, maybe you look after those pennies and dollars. Again, that's just perspective. But I'd be interested to see what Joanna thinks about that topic.
Yeah, look, there's always this sort of psychological implication from using cash or different types of things to buy whatever you want. I suppose because cash is very tangible, it's in your hand, it's there. You may monitor it more closely. You count up, the cents and the dollars, and maybe you have more of a budget in mind. When you're paying with a card, it's just a piece of plastic. People do tend to tap and go. We often see people literally not even ask, on those terminal payments. People just tap. They don't even look at how much they're tapping on the screen. They literally just tap. And now it's gone to, tapping with your watch, one of those iPhone watches, scanning with your phone. It's just becoming more like money. It's just becoming more and more impersonal. And businesses like that. They don't want people to really think about what they're spending. Because what happens when people think about what they're spending, they become more logical in their mindset. People spend more when they're in that irrational mindset. And I think we talked about that with that Daniel Kahneman, the irrational buyer. That's exactly when people buy more, like impulse buyers. Impulse buyers tend to be more expensive buyers. So if you're spending with that mindset, then you're going to be spending more on higher margin products.
I've noticed this. I was in a bar recently, and when you ask for a beer, they don't even tell you the price anymore. It's almost just they give you the machine, you tap it, and people generally don't seem to even ask. So there's a trust aspect there. You must be trusting the place you're in, but it does create issues. The second thing I'd say is probably in olden times last year, I mean, people would have had a budget in their mind for that night. They might have gone to the bank, they might have taken out, $100, $200, whatever it was, and that was their budget for that evening. You think when you're in an environment where it's a restaurant, certainly in the evening scenario, you think of a casino, you think of gambling, there are dangerous implications for that, whereby 10 years ago, when the money wasn't in your pocket, you had to leave and go to a bank, etc. And there was a natural control on how much you could spend. Nowadays, the only control is what your credit card says.
I think there'll be a trend now as more businesses, get set up for more of that cashless society. For instance, massive supermarkets at this point in time are testing and trialing that just tap and go payment terminals right at the end. So you don't even, you can just they initially set up with no tap and go. You could literally just walk out the store, and then people didn't really like that. They wanted something that they could tap and go, almost like the tubes. So they felt like that people could visibly see them paying. They weren't stealing anything. So they actually wanted a tap and go pole. But initially the idea was not to have that at all in supermarkets. So that's being tested and trialled now. Now, why are they doing that? Well, if you have everything online and it goes straight into, business analytics, business intelligence systems, they can basically track your spending, what you buy, purchasing, and also, they'll lead you to more of a sort of a more subscription type of payment revenue model, rather than coming in when you want to. They're going to try and bring in some kind of subscription model to lock you into that. So let's say if we keep with this, supermarket theme, to a particular supermarket chain. So you always get your groceries at that particular place, and you're sort of locked into that ecosystem. So I think when you say when we're moving to a more cashless society, we'll also be moving to more of a subscription-based society. And a lot of our money, our budgeting, it will just come out of our account. So I think from a consumer perspective, we've got to be really more on top of budgeting than ever before. But as Aidan was saying, we'll probably be less inclined to do so because it's not tangible to us yet and it's very new.
I think on the topic of supermarkets, I read this week some of the newer style stores that I think Woolworths and Coles had in the CBD in Sydney that were trying to trial tap and go only, no cash, had to withdraw completely from that and are now accepting cash again. And the reason was abuse from potential customers. In all societies, in all populations, there are early adopters, there are the middle ground, and then there's people who don't want that. There's a very large audience of people who want to pay with cash for various reasons, whether they're not used to tap and go, they're older people, or they're also privacy minded. And like anything else, like we see with vaccinations or anything that people feel is being fast-tracked or pushed along on them, there's also a certain percentage of the population who push against that. And so I would argue that you're seeing more people wanting to pay in cash, a certain population holding on to cash. And let's be honest, there's always transactions that people want privacy that they're doing. They don't want to be tracked, whether it's as simple and innocent as buying somebody a birthday present and not wanting their husband or wife to see that, on the credit card bill. There's always, and that's the most innocent version of that I can think of. But you look at the huge amount of transactions that happen globally that are, in cash, that will want to remain in cash, and a certain, whether they're legal or illegal, there's an awful lot of activities that people will want not to be tracked and not to appear on their Amex bill at the end of the month.
Yeah, and I think this is a perfect example of segmentation. Segmentation and the interjection of major global trends being, that cashless society. There's always going to be, I think Aidan was saying, maybe it's a generational difference. You've got the younger people that really do value that convenience. They don't mind the information being used to track them. They think that's a great thing because that adds convenience. And they also don't mind to get that convenience. I'm not sure if they'll be willing to pay a price premium, but over time with a subscription model, I do predict that prices probably will go up once you're locked into a system, whether that's, if we go back to that supermarket example, across a basket of goods, because they'll have all of that data, and then it's much easier to optimize based on consumption patterns, because consumption patterns by each individual will be tracked with that sort of subscription cashless society model. But then equally, there are people with different value drivers that do respect, privacy, having the freedom of choice in a different way. And I think both of those value drivers are equally important, have to be thought about in business model transformations, because we're not fully there on one trend. We're really at that crux. We don't know. And so a lot of businesses are still contemplating how they can balance those different need sets, even though we're rapidly progressing towards, digital and everything's online. There's still a large majority proportion of the world's population that maybe don't value that as much as Harvard Business Review would like us to believe.
I think that the regional practices in every country vary differently. Like, one thing I'll say, anybody who's been to the United States for any period of time will know the importance of having small dollar bills and different things like that for tipping, where a culture of tipping is so ingrained. I would think the idea of cash dying out in the United States would be much less likely than in maybe a country like Sweden or Denmark or one of those nations where there's not a tipping culture, and there's potentially more of a regulated market with less not an illegal activity, but let's call it less regulated activities. I think that also we'd have to look at, in previous times, you could often get a discount for paying in cash, and maybe you'd have to pay a slight surcharge for paying with cards, whether debit cards or credit cards. And even in Australia, it's still quite common in many, certainly the smaller locations, to pay a surcharge of a couple of percent, maybe for using an Amex card, or even some of the more obscure ones like Diners cards or JCB cards and these sort of things. I could see a day when privacy is seen as a privilege, or is seen as a value add, and people might actually pay a small premium of 1% or 2% to use cash. I think that's actually something that potentially could happen. Yeah,
I suppose my final point on that would be it's quite likely, if you do move to a cashless society, that there will be more surcharges and fees attached, often hidden to a certain extent. Like with everything, there'll be a website page directing to another page with all the terms and conditions of a particular subscription or purchase, and with that will come fees. And research clearly shows that businesses do not like hidden fees. I think that probably be tested, and again, as we move forward, people will continually try adding those fees. I know banks keep doing, even though the research says the customers don't like it, that it's still done. So it's obviously quite profitable to do so, even though you might lose customers as a consequence. So obviously that those calculations have already been made, and banks still do it, so it obviously is very profitable to them. So there'll be those sort of things to consider: segmentation, business model adaptation. I know quite clearly from consulting that businesses' cost structures, as well as their revenue and price management systems, aren't really set up for a cashless society. However, at the same time, we do see business leaders thinking in that way. However, segmentation, even in its most traditional form, is still very ambiguous in a lot of companies, and something that people really don't consider as much as they should. And segmentation and pricing is critical to this cashless society equation. So I think there's a lot of work, especially in terms of internal capability systems and strategies that need to be developed to actually operationalize this type of concept.
Yeah, I think certainly from an operational perspective, I think it could have implications that people haven't thought about yet. And it could go either way. One example I can think of is the Reject Shop, which is a major chain in Australia of, I suppose, discounted items, home domestic items, items such as sweets, lollies, home cleaning materials, those sort of things, odds and ends. And my understanding is they were suffering in recent years through competition from less regulated cash accepting businesses, where potentially there was a bit of suggestion that maybe these companies weren't paying fully tax and all this sort of stuff. That's potentially just a defense mechanism. But if you move to a cashless society, not paying tax, not following through with all the accounting, etc., it makes it a much more even playing field and decreases the black market or the less regulated market sector. So potentially it could give a bit more power to the larger corporations, to the bigger companies who have better banking systems in place, have potentially lower margins they're paying to the banking companies. And they're more than happy to move towards it because it reduces costs of handling cash, reduces likelihoods of theft, and so their actual operating costs potentially will decrease. I, for example, remember when I was a teenager working in a supermarket, and one day I was asked to drop cash down to the bank in actual bags of cash, which in retrospect was quite dangerous. But I suppose the days of stealing from supermarkets, stealing from shops, those days maybe are over in many regards. But there are implications from this cashless society that could change the potential strength of some companies vis-a-vis others, and we won't really know what those are.
Yeah, I think there will be a lot of learning, a lot of tests and trials that will be required before, during and after all of this sort of change happens. And it'd be exciting to see how consumption patterns change, how people come about knowing different companies and why they choose certain companies over others when they make their purchases. But I suppose, exciting trends to come, but there's a lot of work that needs to be done to ensure that can be done safely, and you can fully operationalize that from a cost and demand perspective. But anyway, I hope you enjoyed our conversation today, and we look forward to you joining us next week. Thanks a lot.
Yeah, have a great day and a great weekend. Thank you.